Visionplus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. Visionplus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously, create dozens of quick lists, display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Thursday, June 11, 2015. The question bar is open, folks. If ever you have any questions, feel free to ask them. Today on the markets, we actually have the TSX that is weaker compared to the American indices, but the American indices also are going down after yesterday's rally. And this actually confirms what I said yesterday, where on MarketGurus.tv we were not in favor of actually recommending long positions, even if we had some breakouts in the market, because we thought that this rally that started for the last 2 days, the timing of this rally was going to be short-lived. Today we have a correction. This correction is mostly stronger on the TSX, and on the TSX the only reason why is because the resources are taking a bigger hit. We have a lot of stocks in the mining sector, gold sector, which are taking a hit. So the show of today is mostly going to be focused on gold, mining, stocks where we actually have some more weakness. So let's start with gold. Gold actually is going down today. One reason why we could see the gold is going down, well, first of all, there's the technical reason with the US dollar that is having a slight rebound, but there's also what's happening in Greece, because the Prime Minister of Greece, Mr. Tsipras, the German Chancellor Angela Merkel, and the French President had a meeting, and at this meeting it actually gave investors hope that we might have an agreement in Greece. So if ever there's an agreement in Greece, well, investors are going to get out of gold because there's less uncertainty. Now, with this situation here, we have gold that is on the verge of testing its low here of 111.77. For the gold sector, it's resuming its bearish cycle. Now, it's tough to say, should we short the gold sector? On MarketGurus.tv, we already have a short exposure on the sector through a stock like Agnico Eagle. Shorting the sector right now, there might be some risk that those breakdowns might be false signals, especially, for instance, a stock like Eldorado Gold. Look, technically speaking, everything is you should short Agnico Eagle because it broke down an important support. But when a stock is breaking down an important support as much, technically speaking, there tends to be a great wave of buyers that's coming in because they find that stock that is at a cheaper price. So we do have here Agnico Eldorado Gold. Yes, that is a breakdown. Yes, that is a shorting signal. However, close to the oversold situation on Eldorado Gold. So for those reasons, I don't think that we definitely should short a stock like Eldorado Gold. I will be more willing, for instance, to possibly consider Kirkland Gold as a short. Why Kirkland Gold? Because if ever the decline in the gold sector continues, or Kirkland Gold, we see that it could actually totally reverse its upward corridor on a yearly basis and have at least some potential towards where 505. So there's definitely more gain potential on a stock like Kirkland Gold. It's oversold, yes, but I think until 540, well, there's 40 cents to be made at least on a stock like Kirkland Gold if the decline continues. So a lot of weakness on gold. I think that right now for us, it's tough to say if ever it's a credible decline. Barry Gold today is also breaking down, but right now on Barry Gold, in terms of potential, it has a potential until what, $12, right? So or $12 or yeah, towards its bottom. $13 will be more accurate for a stock like Barry Gold. So that is actually a strategy that you could favor, $13 for Barry Gold. But really, oversold situation on most of those breakdowns, and this is actually a technical pattern, a technical indicator that we'll look forward to determine if a stock is a great shorting signal. So yes, gold is going down due to what's happening in Greece, due to the rebound on the US dollar. However, a lot of those breakdowns today are either too oversold, so there's a probability that we might have a wave of buyers that might come in. So we don't definitely think it's appropriate to short that sector today or be in a shorting spree on that sector. If you already had some short exposure, let's say you have opened some positions on HGD or Dust or on some stocks that you shorted. For instance, if you had Market Gurus at TV, you would have followed our recommendation when we said you should short the gold sector around this area when we shorted Agnico Eagle. Well, we're more comfortable to hold on to that current exposure instead of increasing it. Now, the mining sector also remains weak, but in the mining sector though, I know yesterday I said that you could actually start to increase your exposure in the mining sector by buying some positions that are staying neutral. In the next segment, we're going to make a follow-up on this statement that I made and see what are the stocks that you should continue to hold on to and the stocks you should get rid of. So folks, as I said, the question bar is open. If you have any questions, feel free to ask them. Now, are there some stocks that you should get rid of? Yes, there are. A stock like London Mining, a clear short opportunity, clearly reversing an upward trend there for London Mining. Look, the stock is not yet towards its oversold situation, so there's a probability that the stock might go further down, at least towards what, 505. So there's that potential in a stock like London Mining going below its 30-day, 50-day moving average. Actually, the 10-day, which is in red, is just crossing below the 30-day moving average, which is actually a really bearish signal on London Mining. So if you bought London Mining yesterday within this set of information, I think you should actually get rid of that stock to avoid having to tolerate a bigger loss until $5. A stock like Freeport McMoRan, yes, it was actually, we had the conditions there. Histogram in positive territory, stochastics towards 30%. So, okay, if you bought Freeport McMoRan yesterday, you should continue to hold on to it because it has not broken down its support. A stock like Copper Mountain is doing the same thing. Still neutral, has not broken down its support of 120. So there's no need to get rid of a stock like Copper Mountain. Tech Resources more at risk though because it actually could go lower for Tech Resources. And Southern Copper is actually neutral. So as long as it doesn't go below $30, there's no need to get rid of Southern Copper. So it's not a sector where you should close all the positions that you bought at the bottom yesterday, but it's a sector where as long as you're respecting your support, your stop loss, it's actually appropriate. And this is why on London Mining, it's appropriate to do so. Now, for this though, by looking at the market conditions, where are we? Well, NASDAQ has reached our target of 5,100. It's actually stabilizing. On Market Gurus.tv, all the short exposure that we had in the American markets, we were reluctant to close those short positions as long as the NASDAQ could not confirm the break of this resistance. We're also reluctant to short them, to close those short positions as long as the Dow Jones could not reverse its downward trend and go above 18,000 points. And for the TSX though, we're reluctant to close our short positions as long as the TSX was unable to go above 15,000, which corresponds to that support, former support. Now, this is a list here. I want to show you of all the best breakdowns that we have on the markets. London mining for a target of $5. If you're shorting London mining, $6. That resistance is your exit point. Gold Corp, look, it's too oversold for me. Gold Corp breaking down an important support. Forget Gold Corp. Forget it. Forget it. Now, Diamond Offshore Drilling, yes, it's a nice short for our target towards that former support at $26. So there's a 10% potential on that stock. Now let's take a look at the histogram here. So we're making a new low while the histogram is still positive. It's still confirming an upward trend. So that's a clear bullish divergence there on Diamond Offshore Drilling. So for those reasons, I'll be a little bit more not in favor that much to short a stock like Diamond Offshore Drilling. So for me, Diamond Offshore Drilling would not be one of the greatest breakdowns. Transocean, yes, right? Clearly reversing an important upward corridor. So it has some room to go on the downside though, at least towards $16. So that stock is one of my favorite. Compañía Energética, no, it's having a rebound intraday, forget it. King Digital, yes, clearly breaking down the support. So King Digital, it's a nice short opportunity. So really we have few short opportunity on the market, and those are my best pick. As I said, for Diamond Offshore Drilling, the only thing I don't like is the histogram here, because while we're making a new low, the histogram should have been going lower, but actually it's trending upward here. So that's a clear bullish divergence, and that's a sign you should not face. That's actually a technical indicator you should follow to determine if a stock represents a great entry point or not. Now, you have one question here from Al. He owes 7,000 shares of Dara. Oh, nice, nice. Don't know what to do after the class action issued recently. Your opinion, please. I don't know anything about the class action, Al, so I'm not in a position to give you my opinion on that. To stay technical, I would say if you still have some shares in Dara Bioscience, technically speaking, I think it's a hold. The stock stays neutral. And the healthcare sector, I know it's something that happens here and there in terms of class action. Now, for me, the exit point is becoming at 90 cents on Dara Bioscience, because the stock could reverse clearly its upward trend. So for me, technically speaking, it's a hold, but I cannot give you my opinion on the class action because I'm not following that company as much.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So welcome back, folks. We have one question here from James Chong. Please analyze PTBI and NASDAQ. PTBI, this is my analysis, James. First of all, sorry for that. Technically speaking, this is the things that I like. 10-day above the 30-day moving average, the stock stays neutral. So it's actually a good thing. Stochastics here towards 30%. There's a wave of buyers that's consistent on a stock like that. Now, the histogram is also heading towards positive territory, so which is also a good thing. So what is the strategy on a stock like that? It's a stock that's explosive. The thing is that that's a stock where you can make a lot of money as well lose a lot of money. So technically speaking, for me, by putting a 30-minute chart, 250 period on that stock, staying technical only, I would say that the entry point will be if the stock can go above 775 intraday wise. 775 if it goes above that, 791 if it goes above that point, buying signal, target towards that former resistance of 875. Do we have the conditions to have that? So far, it's tough to tell because the stock still remains neutral. The wave of buyers is not convincing enough. I would say that for a stock like that PTBI, that it's worth to be watched. Maybe you could gradually open some position on that stock right now with insider information. Make sure you put your exit point at $7. And if ever the stock goes below $7, we could expect another pause around 644, right? Or you could say, you know what, I'm going to wait for a clearer signal, wait for the stock to break 786, target 875 towards that former resistance. So that's my analysis on the stock like PTBI, but it's actually a stock that's among our list of the stock that are explosive that is published on marketgurus.tv. So it's a stock that we're putting on our watch list on marketgurus.tv that you can have access for free for 10 days. Now, how about ELD? You're talking about Eldorado Gold. Well, Eldorado Gold, as I said, it's a breakdown. Yes, the thing is my God, Eldorado Gold, it's a clear breakdown. Yes, but as I said, Anon, is that when a stock usually breaks an important support on a yearly basis, what we have found, that's our experience with the analyst short portfolio that we are doing, is that there tends to be a wave of buyers that's coming in. Technically speaking, it's a breakdown, it's a selling signal. However, first, the wave of buyers, I think it's more likely to come, especially looking at how the stochastics is really towards the oversold situation. So there might be some buyers who are coming in into a stock like that. So for me, Eldorado Gold, I don't really like that breakdown because I think there's a risk that the stock might actually go back up. If you have a bigger aversion, higher risk tolerance, I would say if you want to short it, 575 is the exit point on a stock like that. But for me, I will feel more comfortable, see how the gold sector performs tomorrow, and even if the stock continues to go down, even if I get it in a second day movement, I might feel more comfortable to get into a stock like that. But for today, that is not a stock that I like personally as a short opportunity because it's breaking an important support and it's actually close to the oversold situation. Now, is it more risky to short a stock day trading than trading a stock that is uptrending? Well, it's not more risky. What I would say is that there are more inefficiencies on the short side, which means that there's a possibility to make more money when you're shorting. Because first of all, there are three reasons. Analysts who cover companies, they usually issue more buying recommendation than selling recommendation. So there's more information that's positive about companies, so not a lot of people will feel comfortable to short. Second of all, a lot of investors, including big investors, usually tend to buy more than shorting stocks. So I would say that, is it more risky? It could be more risky, definitely, because there's not a lot of people who do that. But, you know, usually on marketgurus.tv, our customers are mostly asking for buying stocks in the upside. So whenever we have some stocks that are going down, we tend to not recommending in our top 5 intraday. Most stocks that are recommended in our top 5 intraday are either stocks that are continuing to go up or bearish ETF when markets are going down. So for day trading, I would say, technically speaking, normally speaking, yes, it's more risky, but you can make also more money in shorting because of the inefficiencies, because less analysts issue sell recommendations on stocks, and also less people do it, including big institutional investors. So Jack bought Ren yesterday. Ren was really active yesterday. So you bought Ren, yes. Yesterday, keep and wait, exit point, analyze, please, thank you. Well, Jack, you bought it. Great job. You hold on to that stock. Now, exit point for me, it's 120, right? Below all those moving average, 120, 119. That will be an exit point on a stock like REN. Now we are bounded with this 100-day moving average at 146 and this 50-day moving average at 120. So as long as we stay there, it's a hold. But if we go below 120, I think you might consider to close that position. Getting close to the overbought situation. So far, it's in the energy sector, a sector that is showing some weakness today. So that stock cannot escape the wave of sellers. So far, I don't think you should panic on that stock. You had a good entry point. You should applaud yourself on that. We have some weakening volume, so this decline could be a point where we might not go as much low. And for me, it's a hold. It's a hold. 120 is the point where you're going to have to consider to close that position. But for now, it's a hold. You're going to have to tolerate a correction or a stabilization phase on a stock like that That's for sure, because volumes are declining. We're getting close to the overbought situation. But if it can stay above 120, you won't have to say that you didn't get in on the great moment. You got it in the perfect timing on the breakout here. But right now, you just have to be a little bit more patient. As long as the stock stays above 120, you hold on to it. So I'm going to take all the other questions tomorrow. There's some really interesting questions. So Z and I'll be there tomorrow because I'll answer your questions. They're really interesting when I want to touch base on. And as for the best day trade of the day, it's that stock here that was recommended on marketgurus.tv that you can have access for free for 10 days. And it was RGSE. One entry point here, another one there, and it just confirmed another entry point. So really 4 entry point on a stock like RGSE. Now, what's going to be the next signal? Higher than 365 on a clear stochastics that's heading more towards the overbought situation and an increasing volume. So RGSE 366 as an entry point with a stochastics that's heading towards the overbought situation. That would be the signal on a stock like RGSE for day trading. So overall, folks, we think that for the market situation, we are having some weakness today. It's not a situation where you should be in a shorting or buying spree. We think to stay on the sideline, it's still a great alternative, right? Because we don't know what's going to happen tomorrow on the markets. It's tough for us to give a call. Now for gold, yes, there's some weakness in gold, but the breakdowns are lacking quality. Close to the oversold situation, do not give a lot of the short potential. So we're not so convinced that today is the perfect timing to short the gold sector. But if you had some short exposure that you've opened the last week or the last few weeks, you hold on to them. Because so far we think that if ever the decline continues tomorrow, those of you who have opened some positions earlier on the short side are well positioned to take some profit. So that said, see you at 12:30 on the Swing Trading Show on Visionplus.com.